today's call, we will be referring to various non-GAAP financial measures that can provide useful information for investors. However, the presentation of this information is not intended to be considered in isolation or as a substitute for the financial information presented in accordance with GAAP. The earnings press release contains a reconciliation of each non-GAAP financial measure to the most comparable measure prepared in accordance with GAAP. In addition, we will be making numerous forward-looking statements during our remarks and in response to your questions. These statements are based on our current expectations and beliefs and involve known and unknown risks and uncertainties, which may prove to be incorrect. Actual results could differ materially from those described in those forward-looking statements. The text in our earnings press release includes many of the risks and uncertainties associated with such forward-looking statements. Today, we will be hearing from key members of our senior leadership team, beginning with Irwin Simon, Chairman and Chief Executive Officer, who will provide opening remarks and commentary, followed by Carl Merton, Chief Financial Officer, who will review our quarterly financial results for the third quarter and update our financial guidance for the fiscal year 2024. Also joining us for the question and answer segment are Denise Faltischek, Chief Strategy Officer and Head of International, Blair McNeil, President of Tilray Canada, and Ty Gilmore, President of our U.S. beer business. And now I'd like to turn the call over to Tilray Brands Chairman and CEO, Irwin Simon.
Thank you, Baron. Good morning, everyone, and thank you for joining us. At Tilray Brands, we take great pride in our mission to be the most responsible, trusted, and market-leading cannabis and consumer products company across the globe. Today, with our complementary business units, we believe Tilray Brands is the best-positioned company in the world to take advantage of all the positive regulatory tailwinds happening globally with cannabis legalization and drug policy reform. In Canada, Tilray continues to lead the cannabis industry with the leading portfolio of adult-use brands and the number one market share. In the event the current excise tax regime were to be replaced with a 10% ad valorem tax based on the value of the product sold and not a per gram tax, we expect an annual savings of $80 million. We also expect to benefit from additional cannabis-related regulatory reforms around marketing and THC potencies. I'll take a deeper dive in the Canadian market shortly. In Germany, Tilray has the leading cannabis market share by revenue for the trailing 12 months, and we believe we are best positioned to capture a large portion of the expected growth in the medical market with both our in-country cultivation facility in Germany and our state-of-the-art facility in Portugal. We also have the ability to ship products from Canada to Germany. In the U.S., Tilray has multiple options, and in particular is well-positioned to benefit from the federal legalization of medical cannabis as a result of rescheduling. Yes, we believe that the rescheduling of cannabis from Schedule I to Schedule III in the U.S. would provide a path for Tilray to sell pharmaceutical-grade medical cannabis in the U.S., subject to doctor prescriptions. This is a different strategy from what MSOs are doing today. We believe there's an opportunity to supply medical cannabis products from our existing operations into the U.S. for medical purposes. Further, in the event of a future federal adult use and medical cannabis legalization in the U.S., we believe Tilray is well positioned to immediately leverage its strong global leadership position, know-how, and strategic strengths across operations, distribution, and brands to sell THC-infused products across its robust distribution network and sales channels in the U.S. Today, Tilray is a clear outlier in the global cannabis industry because we're the only company with global expertise in both adult use and medical cannabis. Our innovation comes from GMP certified pharmaceutical grade medicines to all recreational cannabis formats, including THC infused beverages, which also parlays into our beverage strategy. We have rigorous cannabis quality control regulatory affairs, branding, marketing, sales, and distribution. We also have the number one cannabis market share in Canada, the number one cannabis market share in Germany, as measured by revenue, and we distribute medical cannabis in over 20 countries around the world. Since 2019, we quickly developed a diversified and award-winning portfolio of brands, backed by a best-in-class operations in Canada, the U.S., Europe, Australia, and Latin America that supports our goals of becoming a multi-billion-dollar cannabis and consumer products company that addresses the needs of consumers and patients we serve today. As you know, the leadership team at Tilray has the expertise of buying CPG brands and building them into somewhat greater than they were before. Our creative portfolio of beverage brands includes craft beers, spirits, ready-to-drink cocktails, ciders, and non-alcoholic beverages. We are now the fifth largest craft brewer in the U.S., with a 4.5% share of the craft beer market. With over 500 beer distributors alone, Tilray is now dominating key regions across the U.S., with our craft beer brands in the Northeast, Pacific Northwest, Midwest, and Southeast, along with one of the most awarded bourbon brands with Breckenridge Distillery, which continues to gain market share across whiskey, vodka, and gin products. Our wellness brands include Manitoba Harvest, hemp-based food products, ingredients and snacks, as well as our Happy Flower, our CBD-infused beverages, and our recently relaunched Highball energy drinks, which in its first month on Amazon received over $1 million in orders. With the appropriate approvals, we're also looking to introduce hemp-based Delta-9 beverages and products with our Happy Flower brand and across other wellness brands in the U.S. And finally, we own and operate a European medical cannabis and pharmaceutical distribution business in Germany, CC Pharma, also known as Tilray Pharma, with a robust footprint reaching 13,000 pharmacies in Germany alone. With broader medical cannabis use, doctor prescriptions in Germany, we expect there to be tremendous demand for medical cannabis within pharmacies. I can't predict the future, but my belief is there will be a lot of cannabis regulatory changes we've seen with Germany, in Canada and the U.S., and Tilray is best equipped to reach these underlying opportunities, and we have the assets and the tools to reach our goal for Tilray brands to deliver industry-leading profitable growth and sustainable long-term shareholder value through a focus on these three fundamentals. Maximizing profitable revenue growth through organic growth and strategic acquisitions with strong synergy opportunities. Realizing the benefits of optimized asset utilization and cost management to ensure an efficient cost structure across all our business segments, and to strengthen our industry-leading balance sheet and cash position. During Q3, we achieved net revenue of $188 million, representing approximately 30% growth over the previous year. We grew our revenue across our core business segments. This was achieved by focusing on organic growth of legacy brands and enhancing the performance of our more recent strategic acquisitions. Gross profit was $49.4 million, despite impact of the newly acquired craft beverage brands, which have a lower margin. Our net loss was $105 million, which only $4.5 million represented loss from operations, and cash used in operating activities was $15.6 million. Adjusted gross profit was $51.6 million. Adjusted EBITDA was $10.2 million. Adjusted net income of $900,000 and adjusted EPS of 0 cents. We delivered positive adjusted free cash flow for the quarter. Over the last 3 quarters, we significantly reduced our convertible debt by $205 million, decreasing our net debt to approximately $175 million, and will work to continue reducing our indebtedness, optimizing our capital structure, and enhancing our financial flexibility. The net reduction in our convertible debt will decrease our annual interest expense by $9.8 million, which flows directly to adjusted net loss and adjusted free cash flow. Let's now dive deeper into each of our business segments. We grew our global cannabis net revenue by 33% to $63.4 million in Q3 compared to the previous year quarter, driven by our acquisition of Hexo and Trust, as well as our international business and innovation in the Canadian markets. Net Canadian cannabis revenue grew 31% to $49.4 million in Q3 compared to the previous year. We achieved this growth with the Hexo acquisition, despite price compression totaling $3.1 million from the prior year quarter, and a crippling tax structure that has allowed taxes to spike while prices decline by more than 50%. Excise tax increased by $8.2 million and amounted to $21.8 million, or 32% of our gross Canadian cannabis revenue in Q3, compared to $13.6 million, or 26% in the same quarter last year. Recent enforcement efforts by Canada Revenue Agency garnishing LP payments from the provincial boards is already having an impact on our competitors, over 1,000 of whom have negligible market share. The continued enforcement by CRA, we believe, will lead to further and necessary industry consolidation, perhaps on a mass level. Canada continues to be the largest federally legal and commercial adult use cannabis market in the world, and Tilray Brands maintains that number one market share position in the country. We are number one in Ontario, number one in Quebec, number one in British Columbia, which together represents over 60% of the population of Canada. We're also number one in cannabis flower, oils, concentrates, and THC beverages, number two in pre-rolls, and number four in vapes, and in the top 10 in all other categories, all while operating under rigorous, high-quality control standards. Our focus in Canada is on two things. First, growing sales primarily through continuous launches of new product innovation, and second, taking more and more costs out of our businesses. On the latter, a large part of our acquisition strategy for Hexo and Trust involves removing legacy costs and SKU rationalization from these businesses. For Hexo, we originally targeted $27 million, but then increased that to between $30 and $35 million, of which we've already achieved $27.5 million in savings on an annualized run rate basis, of which $15.6 million is realized cost savings during the period. Our Hexo integration plan includes streamlining our Canadian operations, improving utilization of our core facilities, improving margins, and maximizing cash opportunities by pursuing divestitures and consolidating facilities. We plan to close the Cayuga facility and move its cannabis cultivation to our existing Canadian production lines, sell our Maison facility in Quebec, which is currently cultivating cucumbers as a vegetable operator, and sell the Belleville facility and move our manufacturing to our London facility for our beverages. We expect this plan to result in one-time $70 to $85 million of Canadian cash flow inflow opportunity and accretive to margins and net income by $5 to $7 million on an annual basis. From a regulatory standpoint, the expert panel appointed by the federal government clearly highlights three areas of focus which Tilray would benefit from once implemented. First, excise tax reduction, which I've talked about, both in adult recreation and medical, would benefit Tilray $80 million. Secondly, there is a proposed opportunity for pharmacies to carry CBD and medical cannabis for medical patients, which would move plant-based medicines into the mainstream as an option for patients to treat ailments. And finally, enforcement against illicit websites, dispensaries that don't contribute to excise tax, and put youth at risk through unregulated product channels available easily online with e-transfer and Canadian Post e-mail. We think Canada Post and the Canadian banking systems are responsible for shutting down access to these unlawful establishments. Turning to international cannabis, we grew net revenue organically by 44% year over year to $14 million, and we remain the number one market leader in medical cannabis across Europe, with a leading market share in Germany and Poland. Tilray's international growth has also been driven by increased sales in our existing markets such as Portugal, Italy, the UK, Australia, and New Zealand. The new German medical market opportunity is projected to be approximately $3 billion in the medium term, while the European opportunity could represent a potential $45 billion medical market alone in the long term. Our presence in Europe allows Tilray to grow our global brand portfolio to a base of over 700 million people in Europe, which is twice the population of the U.S. While much of the media attention related to the new cannabis reform in Germany has been centered around cultivation for personal use and the establishment of cannabis social clubs, the new opportunities for Tilray flow mostly from the removal of medical cannabis from the Narcotics Act. This descheduled change is expected to significantly expand the medical cannabis market in Germany, as it would allow for more doctors to prescribe medical cannabis more easily to patients and potentially allow for broader health insurance coverage. We will therefore be increasing our educational efforts to bring more and more health professionals on board with medical cannabis as therapeutic options. We estimate that less than 0.4% of the population in Germany are presently buying medical cannabis, compared with 4% in states like Pennsylvania. In Germany, we also stand to benefit from the abolishment of the tender process for in-country cultivation of medicinal cannabis, which is being replaced with a licensing scheme. We are currently one of the only 3 in-country cultivation facilities in Germany today, and these legislative changes would allow us to better meet patients' needs by expanding our medical cannabis product offerings. This would in turn significantly increase our cannabis production in Germany by 5 times more than double our revenue opportunities. Tilray opportunities in the U.S. cannabis remain strong. Over the past several years, our playbook of expanding our business beyond cannabis to adjacencies and complementary markets has positioned Tilray well for the current environment as well for future growth opportunities. While we currently do not engage in any U.S. cannabis operations because of federal regulations, we're well positioned to participate and win in a federally legalized market when that changes either rescheduling or medical cannabis or the passage of federal cannabis legalization. Given our deep knowledge, global expertise in medical and adult use cannabis, and the regulatory compliance apply. Tilray's playbook in the U.S. is to build and deliver iconic sought-after brands in the beverage alcohol and the CPG backed by product excellence and innovation. Educate consumers about our brands and our stringent quality standards to encourage trial and foster loyalty. And last but not least, to drive and scale and distribute to get our brands into consumer hands to grow our market share. Moving to our beverage segment, which is quickly approaching approximately $300 million annualized. As mentioned earlier, Tilray Brands is now the 5th largest craft brewer in the U.S. with a 4.5% craft beer market share, and we aspire to be a top 12 beverage company in the U.S. Q3 beverage alcohol net revenue was $54.7 million, representing 165% growth year over year. Tilray now holds a 4.5% of the craft beer market share in the U.S., and we're just getting started and ramping up. Of this, our legacy brands of Sweetwater, Montauk, Alpine's, Nelson, and Green Flash. demonstrates our ability to successfully grow existing brands along with our recent acquisition of 12 craft brands from ABI InBev. We have gained in scale and see further expansion opportunities. Sweetwater remains the number one brand family in Georgia, multi-outlets. Montauk remains the number one brand family in Metro New York, having increased its distribution by 28% versus last year. Tilray is now the number one craft supplier year-to-date in the Pacific Northwest. 10 Barrel's volume growth increased by 413 basis points since Tilray took over the brand, and we're now capitalizing on the success of 10 Barrel Pub Beer brand extensions by adding Pub Ice, Pub Cerveza line extensions, both innovations we're extremely excited to launch. Growing 24%, Pub Beer is now a top 20 brand on the West Coast with only half the distribution of top competitors due to its focus on the Pacific Northwest states. Still, our ambition is to be much higher as we're aiming and uniquely positioned to become a top 12 beverage alcohol business. This will be accomplished by leveraging our portfolio to win more occasions through core products such as craft beer and beyond, through innovation to categories like flavored malt beverages, ready-to-drink cocktails, and spirits. But ultimately, our plans go beyond alcohol, as we will be expanding into sparkling water, energy drinks, and other categories. This is important because we have the manufacturing facilities, the distribution, and the sales and marketing infrastructure to drive Tilray businesses. Working with BCG, we developed a clear and focused strategy to drive top-line and bottom-line growth for our beverage businesses. The three-pronged approach will deploy a regional strategy called Dual to stabilize scale brands such as Sweetwater, Montauk, Blue Point in their respective key adjacent regional markets across the U.S. and maximize their potential to gain market share from competitors. Dual is already paying off. According to BI sales to retail data, Tilray has increased its market share of total beer in 13 states, including key beer markets such as Oregon, Washington, Colorado, Idaho, Minnesota, and Arizona, when comparing share before and after the craft acquisition. In the Southeast alone, we've improved trends by 4.6% post-acquisition. For Q3, 10 Barrel has seen a 12.3% increase in distribution. Amongst our top 10 distributors when compared to the same time last year, and when comparing 6 months pre-acquisition with the 5 months post-acquisition, overall trends have improved 3.5%. Overall trends for Blue Point have improved 1.3%, while its number one distributor has improved trends by 3.8%, and those are just a few examples. We are also executing a national brand strategy, beginning with revitalizing Shock Top to win as a national craft beer over time by targeting share and connect occasions to reach mainstream male and female drinkers. We think there is tremendous upside with Shock Top, as according to our qualitative research, Shock Top has the highest purchase intent among 12 of the largest beer brands. This is why we're focused on increasing distribution and getting this brand back into the hands of consumers. We are already on our way. In Q3, Shock Top's number one distributor has increased distribution 24% versus last year, while on-premise distribution has increased 0.5% over last year among Shock Top's top 10 distributors. We are aggressively launching new and often disruptive innovation across our beer and non-alcoholic crafts to increase portfolio brand appeal to new consumers and new occasions. Many of our newly acquired brands have not had innovation in the last couple of years. Among many others, recent examples include Liquid Love for heartfelt hydration, Runner's High, a non-alcoholic craft brew for athletes, highball, and hardball, a non-carbonated 10% ABV product sold in 16.9-ounce plastic resealable containers, and non-carbonated shock top lit hard tea. Let me say that we're working to get the cost structure right, transforming the productivity and profitability of the breweries we acquire. We expect that our beer gross margins will increase once we fully realize the cost savings achieved in connection with the fully integrated beverage alcohol platform as we move away from the existing co-packing manufacturing agreements with ABI and increase our productivity in our newly acquired breweries and 13 brew pubs. Finally, let's discuss our wellness segment, represented mostly by Manitoba Harvest, which is fostering a positive impact on people and the planet through hemp by making ongoing commitments to sustainability with breakthrough initiatives such as investment in regenerative agriculture. Revenue grew 12% in Q3 to $13.4 million compared to last year. We partnered with bioactives company Brightseed to revolutionize the functional fiber market and breakthrough product, Manitoba Harvest Bioactive Fiber, which is now exclusively available at Whole Foods markets nationwide. Incredibly, 95% of Americans do not consume the recommended daily intake of fiber. This product provides 6 grams of both soluble and insoluble fiber per serving and is the only fiber solution containing 2 powerful hemp-based bioactives for gut health. Moving forward, the team continues to assess the opportunity to bring hemp derivative Delta-9 beverages to market under Happy Flower and Tilray brands. With that, I now turn the call over to Carl to discuss our financials in greater detail. Carl?
Thank you, Irwin. Recall that we present our financial results in accordance with U.S. GAAP and in U.S. dollars. Throughout our discussion, we will be referring to both GAAP and non-GAAP adjusted results, and we encourage you to review the reconciliation contained within our press release of our reported results under GAAP to the corresponding non-GAAP measures. Let's now review our quarterly performance for the 3 months ended February 29th, 2024. Q3 total net revenue rose to $188.3 million compared to the prior year quarter of $145.6 million, representing almost 30% growth. Excluding acquisitions completed within the fiscal year and the $8.7 million HEXO advisory fee captured in the prior year quarter, our legacy businesses remained consistent despite a 13% revenue decline in our lowest margin segment. We continuously emphasize the strategic importance of our adjacency business model, which is a key differentiator for us. This is best reflected by the contribution of our 4 segments to our overall results, which shows that we are not too dependent on any individual segment having a disproportionate impact on our sales or profit growth. Each segment is also, in our view, on a path to sustainable long-term growth. Looking at each segment now, during Q3 and compared against the prior year period, net beverage alcohol rose 165% and represented 25% of our total revenue mix, more than double relative to last year's 14% of total mix. Net cannabis revenue rose 33% and represented 34% of total mix, up slightly from 33% last year. Distribution revenue decreased 13% and represented 30% of total mix, down from 45% last year. And wellness revenue rose 12% and represented about 7% of total mix, down only slightly from 8% last year, respectively. Diversification is also reflected in our geographic footprint. During Q3, more than 62% of our net revenue was generated in North America. Roughly 36% was generated in EMEA, and the remaining 2% coming from other parts of the world. This compares to about half from North America and EMEA in Q3 last year, with the variance related to the North American acquisitions we completed since that time, namely HEXO, the craft acquisition brands, and the remainder of Trust Beverages. Let me first touch on the key current item related to cannabis before moving on to a discussion on profitability. We incurred $21.8 million in Canadian cannabis excise taxes during Q3, which are a reduction to revenue, compared to only $13.6 million last year. The increase in excise taxes is reflected by a sharp increase in cannabis revenue generated in Canada versus the year-ago period, due in part to the Hexo and Trust acquisitions and a change in our revenue mix to higher excise tax products. Through the first 3 quarters of our fiscal year, we've incurred more than $75 million in excise taxes versus $47 million for the year-ago 9-month period. For many quarters, we have been on the record with respect to the inherent unfairness as to how the excise tax is predominantly computed, which is largely a fixed price on grams sold rather than as a percentage of the selling price. Because the selling price has declined meaningfully since the law was first enacted in 2018, it has made the excise tax a larger and larger component of net revenue over time, particularly as current growth categories like infused pre-rolls and concentrates become the biggest part of our sales mix. To prove this point further, excise tax amounted to 32% of gross Canadian cannabis revenue in Q3, compared to 26% in the same quarter last year. While through the first 3 quarters of the year, excise tax came to 34% of gross cannabis revenue versus 27% for the first 9 months of fiscal 2023. In our view, and in the view of so many others, this price-based tax structure is crippling, as it has allowed taxes to spike as the price of cannabis has declined by more than 50% since legalization. In late February, the Canadian House of Commons Standing Committee on Finance issued a report outlining several recommendations regarding the regulated adult use cannabis industry, including the recommendation to adjust the tax structure. Recommendation 3 to 9 in particular calls on legislators to make adjustment to the excise duty formula for cannabis so that it is limited to a 10% ad valorem rate. If enacted, this would be a welcome change that could result in $80 million in annualized revenue for our cannabis business, which would largely fall to the bottom line. The key to the government's plan and needed relief for our industry is that the provinces not enact their own excise tax to reflect the loss in taxes they are reaping from the status quo, increase their profits at the boards, or mandate that the tax savings are passed on directly to the consumer in the form of lower pricing. The budget announcement is next week, and we'll be following developments closely, but are resolute in our view that reform is greatly needed and measures must be enacted to stabilize the Canadian cannabis industry. Turning back to our performance, gross profit was $49.4 million compared to a loss of $11.7 million in the prior year quarter, while gross margin increased to 26% from negative 8% in the prior year quarter. Adjusted gross margin decreased to 27% compared to 30% in the prior year quarter. I will discuss adjusted gross margin by individual segment in a moment. However, the majority of the decrease relates to the addition of the new craft brands, which are subject to a co-manufacturing agreement with ABI until at least the end of Q1 next year, and the prior year figure including the Hexo advisory fees. Net loss improved to $105 million compared to a net loss of $1.2 billion in the prior year quarter, which included $934 million of impairments. On a per-share basis, this amounted to a net loss of 12 cents versus $1.90 in the prior year quarter. Recall that last quarter we introduced 2 new reporting metrics to our discussions: adjusted net income loss and adjusted earnings per share. The definitions of both are identified in the press release, along with the relevant reconciliations and calculations. For Q3, we are reporting an adjusted net income of $900,000, which when calculated on a per-share basis results in EPS of 0 for the quarter. Adjusted EBITDA was $10.2 million, down from $13.3 million in the prior year quarter. This is mainly a consequence of the negative impact the cannabis gross margin related to wholesale revenue, the termination of the Hexo advisory services contract on our acquisition of Hexo, in June, and the co-manufacturing agreements with the new craft brands, as I will explain shortly. During the quarter, we made great progress against the HEXO synergy plan, which we had previously increased to between $30 and $35 million. As of the end of Q3, we achieved $27.5 million in savings on an annualized run rate basis, of which 15.6 represented actual cost savings during the period. Operating cash flow was negative $15.4 million compared to negative $18.6 million in the prior year quarter. This improvement in cash used during Q3 this year was primarily related to achieved synergies of previously identified cost savings plans. Turning now to our four big business segments. Beverage alcohol revenue was $54.7 million, up 165% from $20.6 million in the prior year quarter. The positive delta was due to contributions from the craft brands, which were purchased last fall. However, we note that the impact of dry January was far more of a headwind than it was for the industry in previous years. Beverage alcohol gross profit increased to $18.9 million compared to $10 million, while beverage alcohol gross margin decreased to 34% from 48% in the prior year quarter. Adjusted gross margin fell to 38% from 53%. Both of these outcomes were a result of the craft brands, which currently have lower margins than our historical business. This is primarily due to the co-manufacturing agreements for brewing. For greater context, adjusted gross margin for our legacy beverage business was 59%, compared to the prior year quarter of 53%, primarily as a result of an agreement with a distributor related to our spirits business. Adjusted gross margin from the craft brands was 26%. The improvement of gross margins in the beverage alcohol business, primarily in the beer portion of the business, represents a major focus for the organization. Gross cannabis revenue of $85.2 million was comprised of $62.1 million in Canadian adult use revenue, $14 million in international cannabis revenue, $6.4 million in Canadian medical cannabis revenue, and $2.8 million in wholesale cannabis revenue. Net cannabis revenue, which excludes the aforementioned $21.8 million in excise taxes, was $63.4 million, representing a 33% increase from the year-ago period. The positive variance is related to the increased organic growth of over 14%, combined with contributions from the acquisitions of HEXO and Truss. Offsetting the increase in net cannabis revenue was the elimination of advisory services revenue totaling $8.7 million from the prior year quarter due to the HEXO acquisition, which terminated the previous strategic arrangement that was in place. While revenue from Canadian medical cannabis grew only slightly, as the category is being impacted by competition from the adult use market and its related price compression, revenue from Canadian adult use rose 37%, which was driven by new product innovation and increased revenue from HEXO and Truss. International cannabis grew 44%, largely because of growth in our existing markets and the expansion into emerging international medical markets. Wholesale cannabis revenue increased to $2.8 million from essentially zero last year, as these sales are opportunistic and variable. We entered into this wholesale agreement to optimize our inventory levels and prioritize the generation of positive operating cash flow. However, it unfavorably impacted our gross profit and EBITDA. Cannabis gross profit was $20.9 million, and cannabis gross margin was 33%, compared to negative $32.8 million and negative 69% in the prior year quarter. Excluding the impact of the non-cash fair value purchase price accounting step-up and inventory valuation adjustments, adjusted gross margin decreased to 33% from 47%. As I said earlier, a portion of the margin decrease is a result of the termination of the HEXO Advisory Services Agreement, which contributed zero gross profit in the current year compared to $8.7 million in the prior year, which, if excluded, would decrease adjusted gross margin to 35%, essentially meaning that our cannabis gross margin was largely flat year over year. Distribution revenue, derived predominantly through Tilray Pharma, decreased 13% to $56.8 million from $65.4 million in the prior year quarter. Revenue was negatively impacted by infrastructure outages and weather, which impacted revenue by just over $3 million, and short-term challenges related to new rebate regulations. Tilray Pharma gross profit decreased to $5.6 million compared to $7.5 million in the prior year period. Tilray Pharma gross margin decreased to 10% from 11% in the prior year quarter because of product mix. Wellness revenue grew to 12% at $13.4 million from $12 million in the prior year quarter. The increase was driven by our strategic focus on targeted advertising campaigns aligned with emerging trends in healthier lifestyles, particularly around the new year, coupled with our continuous innovation efforts. Wellness gross profit was $4.1 million, up from $3.7 million in the prior year quarter, and gross margin held at 30% compared to 31% in the prior year period as we experienced a change in sales mix towards more bulk retail sales. Our cash and marketable securities balance as of February 29th was $225.9 million, down from $408.3 million in the year-ago period. The majority of the variance was related to the payment on maturity of the Tilray 23s, our cash acquisition of the new craft brands, and settling assumed liabilities from HEXO, including unpaid excise tax, as well as legacy litigation settlements. Having now completed 3 quarters of our fiscal year, it is clear that our prior fiscal 2024 guidance of adjusted EBITDA between $68 and $78 million is no longer feasible. We have therefore lowered our adjusted EBITDA range to be between $60 and $63 million, which takes into consideration our performance through the 3 quarters, over $12 million year-to-date in price compression in the cannabis business, and continued expectations for the fourth quarter. Still, the fourth quarter represents a major increase from the current quarter, which is traditionally our lowest quarter due to the seasonality within our segment. The fourth quarter seasonality improvement is a function of our beer business leading up to the summer, a historically busy season. New innovation scheduled to be launched as part of the spring reset, new innovation in our cannabis business along with expected wholesale sales, and in our distribution business as pharmacies buy in bulk for their customers ahead of them going on summer vacation. Recall that we also projected positive adjusted free cash flow from operations for the entire fiscal year, excluding our integration costs for HEXO, Trust, the new craft brands, and the cash income taxes associated with Aphria Diamond. Due to the timing of collecting the cash on the various asset sales mentioned, we now do not expect to achieve this prior adjusted free cash flow guidance. While we were adjusted free cash flow positive in the current quarter, our current expectations are for a very strong fourth quarter of adjusted positive free cash flow. Of course, we will continue managing CapEx as part of our efforts to strengthen our industry-leading balance sheet. Let me now conclude our prepared remarks and open the lines for questions from our covering analysts. Operator, what's the first question?
Thank you. Just as a reminder, if you'd like to ask a question, please press star 1 on your telephone keypad. A confirmation tone will indicate your line is in the question queue. You may press star 2 if you'd like to remove your question from the queue. For participants using speaker equipment, it may be necessary to pick up your handset before pressing the star keys. Our first question comes from the line of Andrew Carter with Stifel. Please proceed with your question.
Hey, thank you. Good morning. Wanted to ask about the German changes. I mean, obviously, it's going to likely manifest in a big uptick in patients with doctors now having more freedom to prescribe cannabis. But kind of thinking through this competitively, how do you see this as your position unique in being able to attack this market? I know that, for the past 5 years, we've seen a lot of decks with Germany circled and capacity to hit that market. Is that capacity still out there? How expensive it is to maintain this? And can you give us a reminder of kind of the stringent quality standards you have to have in place to serve the German market? Thanks.
Andrew, thank you, and great question. Number one, listen, we see the opportunities in Germany in multiple ways. We have a facility in Germany today, and that Germany before only would serve as a tender to the German government. Now that tender process will go away, and we'll be able to sell product into the marketplace. So that's number one. Number two is before, only a certain amount of doctors were able to prescribe cannabis. And it was a very small amount for specialty reasons. And now every doctor, because it's no longer a narcotic, will be able to prescribe cannabis. Number three, we also have a facility in Portugal, which will be able to supply Germany. Number four is we have something called Tilray Pharma, CC Pharma, which is a distribution company that distributes cannabis and other medicines to over 13,000 drugstores. We have a team based in Germany. We have a sales team based in Germany. We have R&D. We have quality assurance. So we've been there for 4 or 5 years. And we've had some tough 4 or 5 years because of what's happening. The other big thing here is, Europe is a big country, and, with no longer being a narcotic and decriminalized, we see lots of other places, countries opening up. I have Denise Faltacek here as head of Europe. Denise, is there anything I missed here or anything that, you should add?
Yeah, no, Erwin, you did not miss anything. Just to add a little bit more in terms of facts. So in terms of that abolishment of the tender that Erwin spoke about, and the fact that under the new regulations, we'll be able to apply for a license with our facility in Neumünster. So today, just to refresh, everyone's memory, we are subject to a tender contract. We are capped at about 1,000 kilograms that we can grow every year, and that is done pursuant to certain pricing. So with the abolishment of the tender, we now open up into a licensing process where we are now subject to just market conditions as it relates to patient demand. And so we can utilize that facility to meet that demand, which will allow us to increase our capacities. We have the ability to today grow up to about 5,000 to 6,000 kilograms without any additional capex. And we can basically then also have pricing that is subject to market demand today. So that is an immediate benefit there. In terms of the ability to prescribe, we are amping up our ability to be in front of doctors and working on symposiums and educational platforms. One of the things we've done on the prescription platform software, if a doctor wants to prescribe medical cannabis, they go to that page and there's a Tilray banner at the bottom which shows all of our portfolio of products, what the conditions are, how to prescribe. So we are out there also providing basically information for doctors who are willing to prescribe and want to prescribe.
I think the big thing is, Andrew, we do have a brand in Tilray brand, but, the whole thing of socialized medicine and prescription and paying for it, we see lots of changes happening. So, we have been working in the German market in regards to, products for pain, for anxiety, for sleep, for cancer, for epilepsy. So we've been all over that and take our expertise of what we do with medical cannabis, in Canada and translate it there. And secondly, like I said, there is a market out there that will be looking for medical cannabis, but ultimately using it for recreational cannabis. So from a standpoint, we really are excited about what's happening in Germany. It does not affect us in regards to the social measures that have come in place there. And, we have the team, we have the grow, we have the infrastructure, the research and development ready to go here, and it's, effective now.
Thanks. I'll pass it on.
Thank you.
Thank you. Our next question comes from the line of Nadine Sarwat with Bernstein. Please proceed with your question.
Hi, thank you. 2 for me, please. First, on the guidance, I appreciate the added color that you gave. Could you be a little bit more specific in perhaps what exactly has changed versus last quarter and this quarter? What sort of surprise to the downside, and how do you see that progressing over the quarters to come? And then my second question, I know you guys called out your number 1 position in Canadian cannabis. So looking at the market share numbers you guys quote in the press release, I think that's on the downward trend for the last couple of quarters. So could you break down what's driving that, and if you think you can regain that over the quarters to come? And if so, how do you anticipate doing that? Thank you.
So I'm going to start part of it. Number one, not all quarters are equal. This third quarter being one of our lowest quarters in regards to bev alcohol in our cannabis business, our fourth quarters and our first quarter, second quarter. So that's, as you look at our quarters, and absolutely there's seasonality within all these businesses. Secondly, we did lose some share in Canada. Some of it was, again, coming back to price compression, and some of it was coming back to some of the prices in regards to our flower. The other thing what happened is we have a lot of innovation that was coming into the marketplace that we didn't get into the market, in our third quarter, which we expect, to get back in our fourth quarter. I think, what's important here, again, there's been lots of price compression in Canada. There, in regards to, we talked about our percentage in excise tax, and the market is changing dramatically there in regards to potencies and being, infused pre-rolls, etc. So some of it is just timing, and do I expect to get it back? Blair, you're on the line. Do you expect to get your share back?
Yeah, thanks, Irwin, and thanks, Nadine, for the call. Just to add a little bit more color to what Irwin was talking about, Q2 and Q3 were our most operational complex periods. So in addition to what Irwin talked about, what we also saw is when you are moving the location of SKUs and where they're going to be distributed from, and one of the things we've done is centralized all our packaging and logistics out of Leamington. That requires us to draw down inventories in each of the boards and then rebuild that inventory once we've changed the source location. So what you're seeing in some of the numbers is, in addition to the price compression Irwin talked about and the innovation side, is just a reflection of the operational complexity we implemented in Q2 and Q3. Once that is completed, and it was all completed inside of Q3, that will generate very strong operational efficiencies for us moving forward, as everything outside of beverages will be shipped out of one location.
Carl?
Yeah, so just I'll add a couple things to the explanation as well. In our beverage alcohol business, and I think in the entire industry, was hit a little bit harder than it has in the past in terms of dry January, and that took away a bit of a portion of our sales expectation for the year. The beverage alcohol business with the new acquisition of the new brands, those brands are at a lower gross margin than the rest of our businesses. We're working very hard to bring those pieces up, and we will get that up over time. As I said in the script, we expect to be able to bring those up much closer to the historical margins that we've achieved, but it's going to take a few quarters, and so it's coming. It's really a function of the co-manufacturing agreements that we have, and getting that production moved and into our facilities and organized in an effective manner while not causing operational problems during that move. And in terms of the free cash flow guidance, we had some expectations on cash receipts on some of the bigger things, including some of the make-whole provisions inside of the spirits business, which we now see coming in June or July as opposed to in May, and that's really what's led to that change.
I think the big thing here is just timing, and that's, I can't always predict things. And, with our beer businesses, the ABI businesses bought lower margins, but just from an integration standpoint, we had a transfer service agreement, with ABI. We're moving away from that at the end of May, moving it into our facilities. We expect to get our margins up into the high 30s, low 40s. Today, with our Sweetwater and our legacy businesses, we're running margins at that rate. So, with that, we look to those margins. In regards to, the Canadian cannabis businesses, as Blair said, integrating HEXO with SKU rationalization, with some of the strains and looking at some of the potencies and timing. And when you're dealing with agriculture products, not everything moves accordingly here. We've made some moves in regards to, our Cayuga, in regards to Maison, in regards to Belleville, and consolidating our businesses there, taking out costs. So again, as we look at guidance, yes, there's guidance out there, but a lot of it is just timing. And as we move forward, we have 4 quarters, not 6 quarters. If it was 6 quarters, it would be different.
Understood. Thank you.
Thank you.
Thank you. Our next question comes in the line of Aaron Gray with Alliance Global Partners. Please proceed with your question.
Hi, good morning, and thank you for the questions. This is Remington Smith on for Aaron Gray. My first question is, in terms of the CRA having the provinces garnish wages, have you started to see any changes in purchase habits from provinces or the overall competitive environment yet? And then with kind of greater focus on those LPs paying their taxes?
I don't think we've necessarily seen changes in purchasing patterns. I think we saw very quickly after CRA started garnishing those wages, a couple of LPs filed for protection within the same week. And then I think there's been a few more that have filed since that period of time. And so, someone who's excessively behind on their excise tax and having their payments garnished are looking at 4, 5, maybe 6 months of time before they're going to get their next payment. They just don't have a lot of choices, and so they're having to file for that protection. I don't think the boards are actually changing those patterns yet. I think that'll probably happen over the next 3 or 4 months as more of these LPs realize and get caught up in the garnishment.
But there's a lot of the boards out there that have been asked by the CRA to garnish excise tax when they sell into it. And I think the big thing for us is we're finally seeing, the Canadian government taking this serious. And those that, weren't paying excise tax could keep going and, putting the rest of us at a disadvantage. So I think we're going to continuously see changes. And, we've talked about the study that's come out there in regards to changes in regards to excise tax and marketing, medical cannabis, et cetera. I think there's some major things here that could really benefit the Canadian cannabis industry.
Great, thank you. I appreciate the color there.
Thanks.
And then my second question. Oh, go ahead.
No, go ahead.
My second question, just in regards to the excise tax changes that you mentioned that could potentially occur in the budget that's released next week. You mentioned tax savings potentially of $80 million for Tilray. So I guess with those savings, do you expect it to mostly be realized by the LPs, or could there be some benefit realized from the provinces and the retailers as well? Any color that would be helpful.
Good question. I think as we know provinces and we know governments, I'm sure they're going to try and grab some of that. But I think, listen, as we've said, and we've openly said, it's about $80 million, to Tilray. And the big thing is you got price compression and you still have the same amount of excise tax that you're paying. And, I think in this quarter it was 33% of our sales was going to excise tax. So something has to be done. I don't mind if some of it goes back to the government on education, on promoting the safety, bringing awareness, marketing, and allow us to do these things. So again, if we got half of it, $40 million back, to invest back in the business, I think it'd be tremendous beneficial, to Tilray and other LPs.
Yeah, and I think the key in this piece is that if the government's making the change to strengthen the industry because the tax became, in a way, oppressive, they need to avoid creating new things that pull that money back. And they need to allow it to go to the industry to help the industry continue to grow and strengthen.
Great. Thank you for the answer there.
Thank you. Our next question comes from the line of Bill Kirk with Roth MKM. Please proceed with your question.
Thank you for taking the questions. Maybe I missed it in the prepared remarks, but what is the $29 million in assets that have been moved to held for sale? I imagine some of it might be facilities that you mentioned earlier, but what specifically is in that number, and how is it determined?
So that number is the Cayuga facility, it's Masson, and it's the Belleville facility that we acquired as part of trust. And so in each case, it's a facility, it isn't the business. The business is being reorganized within our existing footprints. And then we're releasing or sort of selling what become redundant assets at that point in time.
Okay, got it. That's what I was looking for on not the businesses. Okay, and then in the third quarter compared to 2Q, selling marketing expenses up a little bit.
Did we lose you, Bill? Exactly.
I'm sorry. It seems that his line may have a technical difficulty. Our next question comes from the line of Michael Lavery with Piper Sandler. Please proceed with your question.
Thank you. Good morning. Just wanted to touch on the U.S., and I understand at the moment it's strictly speaking a little bit hypothetical still, but if rescheduling occurs, you laid out at a high level how you're thinking about it and a more pharmaceutical approach. I guess a couple of questions is just maybe what's your patience level if it does come to that, just because the FDA certainly is known not for its speed. And so, is your understanding just, that obviously if that door opens, it could still take quite some time, or how are you thinking about that? And in the release as well, you reminded us about the connection to MedMen and how would that fit into that potentially? Is that something that would still stay separate or could potentially become sort of like pharmacies? I guess just maybe lay out some of how you're thinking about potential U.S. opportunities should regulatory change come through.
So as I said, within the U.S., if medical cannabis is rescheduled and medical cannabis becomes legal, we being, a large medical cannabis producer in Canada and Europe and have the expertise and have the research, not knowing what the FDA and not knowing in regards to, what the guidelines will be, Tilray is ready to capitalize on all our expertise. Is there a possibility with NAFTA or with other rules that we can, export cannabis from Canada that's GMP certified? Today, you can export, cannabis from Canada to other parts of other countries around the world if it's GMP certified. So I'm not sure why that wouldn't be the case in the U.S. if that happens. My personal belief, if it's rescheduled from a medical cannabis standpoint and they leave it up to each of the states on a recreational standpoint, then, that is something different. So I think the big thing is I look into a crystal ball not knowing where this is going. I think something happens from a rescheduling standpoint. And, Tilray is ready to move from a medical standpoint. If there was an acquisition for us, we're ready to move. And, we hold the debt of MedMen. We think the MedMen name still has a strong brand name, even though it's had its challenges and it's going through, some changes right now to get rid of some of those liabilities and that. And there's an opportunity that, we could execute with the MedMen name across the U.S. The other thing is depending, and I think one of the biggest opportunities, and we're seeing, some opportunities with Delta-9, which is infused drinks with hemp-infused THC. I think the biggest opportunity is in drinks. And with our distribution systems, with our brands within our beer business and spirits, Tilray could get into that. So, not knowing and not, what's going to happen, I think, as I said, Tilray is circled in the U.S., and it's not like we'd have to change our model being an MSO where we're, restricted to each state. Right now, we could take our expertise from around the world. We can take our medical expertise. We can take our beverage expertise and bring it to the U.S. once we know which way rescheduling happens and it goes. So that's where I'm excited about is once we know what the guidelines are, once we know what the opportunities are, we could easily jump in there without undoing something that we own today.
Okay, thanks. And just on the beverage side, you touched on your hopes for distribution upside on a lot of the, especially recently acquired brands. But do you have a sense how you coming into this spring's shelf resets and what sort of shelf space gains you're positioned for that are already in hand?
So hey, Ty, you're on the call, right? Do you want to jump in there? Listen, I got to tell you, in a short period of time, a lot of these brands were just starved on innovation, starved on distribution. We have 500 distributors out there, and I always say to Ty, if each distributor could do $1 million more, which is not a lot, that's $500 million. So I think the upside on beer is tremendous. As you look at pricing, you look in regards to the whole spirits industry. I think we're so well positioned on beer, on innovation that we're coming out with, moving into water, moving into some energy drinks, moving into some other infused drinks. So we're well positioned with our distributors. We have over 100 salespeople and headquarter people between marketing. So Ty, you want to just talk about some of the stuff that's happening?
Yeah, no. Thanks, Erwin, and thanks for the question, Michael. Yeah, no, we feel really solid about some of the distribution gains, not only that we've made in the third quarter, but we also feel solid about the conversations we're having with several national and regional retailers across on and off premise with our brands. Specifically, if I look over Q3, we've gained north of 1,200 new effective placements on our existing brands. And with the innovation, we continue to see uptick every day with our distributor network and how they're leaning in with us and helping drive distribution. So, chains are going to continue to play a critical role in our success, and we're well suited, as Erwin said, to leverage our partnerships with our distributors and the relationships that we have across the U.S.
Okay, thanks so much.
Thank you. Our next question comes from the line of Matt Bottomley with Canaccord Genuity. Please proceed with your question.
Good morning, everyone. This one's for Carl. I just wanted to go back to the revised guidance here on adjusted EBITDA going into fiscal Q4 here. So I'm just wondering if you could give a little more color on the dynamic between overall revenue progression versus margin expansion. There's obviously quite still a big step up expected even in the revised guidance. And then specifically within that, I'm wondering how much of that is beverage related, given that I think you had commented that you're close to about a $300 million business now in all your beverage portfolios. If you run rate this quarter, and I understand there's seasonality, it's closer to 200 to 225. So I'm just wondering if there's some step up on the revenue side, specifically in Q4 when it comes to your alcohol contribution.
So thanks, Matt. There is significant increase in sales in Q4 in beer. I think we've talked a little bit already on the call in terms of the spring reset and hitting those the key summer selling season, which is really driven in our April and May sales results for the organization, particularly in beer. We've talked a few times about challenges in the spirits business with sales growth, and that we were going to get resolution of that in Q4 this year. So that's also reflected inside of those that expectation on EBITDA. It's potentially driving both revenue and margins during that time period. I think on the beer business's margin side, you are going to see an increase in margins in Q4. That'll be driven by just more volume flowing through the facilities as we ramp up production in March and April to hit those April and May sales, because there's such quick turnaround time and lack of inventory inside that segment. You've also got the build up on the cannabis business to the summer period of time, and increases in things like pre-rolls and other product forms in the cannabis business that are that are consumed on a more of a, let's call it a shared basis, either in a shared setting or actually shared on its own. And so that's a part of it. And with that increased sales level comes increases in margins just because of efficiency on the production side.
Okay, very helpful. Thank you.
Thank you. Our next question comes from the line of Doug Miehm with RBC Capital Markets. Please proceed with your question.
Yeah, thank you and good morning. Question just has to do with, again, the excise tax and going back to this. There's obviously an opportunity for your company, but I am curious if these changes were to go through and you benefit somewhere between 40 and 80 million the way you expected. What's your thinking on the other companies? Because we're starting to lose some of the smaller companies, but is this going to provide the smaller companies with another year or two of life? And I'd say the other thing that I'm curious about as it relates to this, could this result in another leg of downward pricing as they try to maintain market share?
So I think a couple things. Yes, I think, if companies don't have to pay the same amount of excise tax that, everybody is, I think some of these companies absolutely will survive. And I think at the end of the day, we all want a strong cannabis market in Canada. The big thing is, again, what's got to change is the excise tax. And yes, we probably are the highest payer of excise tax in Canada. So for us to receive back $80 million is a lot of money. But at the end of the day, it's money that we're going to put into building our brands, building our products, our innovation, and hopefully marketing and building a bigger category out there. And I think that's ultimately the benefit, that the money's not going back to, taxes. It's going back into build a marketplace and back into, continuously grow the industry. So yes, will more competition be out there? Could there be price compression? Absolutely. But I'll tell you what, I don't mind some more price compression. I don't mind some more LPs being in there. I wouldn't mind that $80 million coming into our company, where we can invest it back in our business and drive growth, drive, innovation, and drive marketing of brands to a much bigger category.
I think it's also important to understand that different entities are going to have different amounts of a win related to this, right? And as you get closer to the tail end of share, the impact for a lot of those companies is going to be a lot less. And if they're behind on their excise taxes, the excise tax garnishment may have the bigger impact for them. We're on as Irwin said, we're on the opposite end of that tail because we're the largest. And then you've got a bunch of companies in the middle where, I think that is more towards where your question was, where you're going to see some people who will be able to survive a little bit easier.
And I don't think excise tax is going to keep everybody in business here, okay? I hope not. I think, I continuously see more consolidation in the Canadian market. I see, some of the smaller players ultimately going away. And I think that's what happens there as a new industry. There's just a filtration of, these LPs. If you come back and look at it today, 25 LPs make up about 50% of market share. There's about another 1,000 LPs that make up the other 50% market share. So, you see some consolidation. You see companies going away. And I think what this creates is a much stronger cannabis industry within the Canadian market. And if what happens also, as I said before, there could be opportunities for grow in Canada to be shipped into the U.S. and other parts of the world, which could, enhance the Canadian cannabis industry.
Okay, excellent. Thank you.
Thank you.
Thank you. Our next question comes from the line of John Zamparo with CIBC. Please proceed with your question.
Thank you. Good morning. My question's on the cost side, both COGS and SG&A, and there's just a lot of moving parts here. And I wonder how much SQ3 represents a run rate, because you've got additional synergies coming from Hexo. It sounds like you have savings on the beverage side as you move away from co-packing agreements, but you're also investing in innovation and product extensions. And it sounds like another variable is selling the production facilities, which I think you said saves $5 to $7 million annually. So I wonder, when you think about all of this in aggregate, is there a net benefit on the cost side, and do you expect to see total costs come down from FQ3? Because it seems like organic revenue growth is a bit more difficult to achieve near term. Thank you.
So first off, I think, organic growth is going to come, particularly in the fourth quarter, as we see the new launches and the new innovation hit the market, particularly in some of these new categories that we're doing on the beverage alcohol side, including the water and the non-alc, and playing in that space, playing in the FMB hard tea space. Things like that are new categories for us. And so I think there are opportunities for organic growth. But, if you're using Q3 as a baseline, I don't think that's the right way to look at it. And similarly, I don't think Q4 is necessarily the right baseline and they're for the exact polar opposite reasons. Q3 is traditionally our lowest quarter in terms of revenue and production, and Q4 is traditionally our highest quarter in terms of revenue and production. So we're going to get an uptick on margins as a result of that incremental volume, particularly in beverage alcohol in our legacy business. And that's going to be what drives a chunk of the earnings guidance, and it's going to be what drives our results next quarter.
I think the big thing here is, too, you heard me say before, the savings we're getting from the integration of Hexo and Truss, and somewhere between, close to $35 million. We don't get that immediately. It evens out over the quarter, so it takes us a full year to get that amount. The second thing is, as we just own the ABI businesses for 2 months, and just, I had 2 quarters, as we integrate them into our businesses and start from the procurement, from the distribution standpoint, I mean, there's a lot for us to get done here, but we're focused on organic growth, and we're starting to see that already. We're focused on which facilities to integrate these products to, which states we're going to focus on. We also have 13 brew pubs out there that we're focused on growing a brand through these brew pubs. Big event for us, 420 coming up April 20. We have 2 big events, one in Atlanta and one in Long Island. And there's also, in every retailer, there's displays built out. So July 4th is one of the biggest, beer category months that is sold out there from occasion. So, right now, as we bring this together, and our aspirations is to grow our beer business to a $300 million business. And you got to remember, in 2020, we sold 2.5 million cases when we first acquired the Sweetwater brand. Today we're on a run rate to 12.5 million cases, with tremendous opportunity with, all the innovation that's happening. So there's just a lot of evening out here, and there's a lot of moving pieces to bring all this together. And I think the big thing is as we look at it, when we get a full year behind all these acquisitions with Hexo, with Truss, and the integration there, we get all this, full year together with all the ABI stuff. We're seeing some great stuff. And listen, just with Montauk, we've owned it over a year, one of the, fastest growing beer within New York today. Some of the stuff we're seeing on the West Coast with Green Flash, Nelson's, and Alpine. So the legacy stuff that we've already bought and owned a year, we're seeing good results for it. It just takes us some time here to get these things integrated.
Okay, I appreciate the color. I'll pass it on. Thank you.
Thank you. Ladies and gentlemen, that concludes our question and answer session. I'll turn the floor back to Mr. Simon for any final comments.
Thank you, everybody, for joining us today. Listen, I wish I could predict what's going to happen in the cannabis industry. There's going to be one thing for sure I can predict: there will be change. And we've been waiting for change for a long time, in the German market. It finally came to fruition. And there's going to be a lot of execution to get it where it needs to be, but it's happening. I do think we've been sitting and waiting through the Biden administration before that change happened within the cannabis industry. There's lots of discussion about rescheduling. And again, it's not something we have control of. But one thing we do have control of, we do know how to grow cannabis. We do know how to sell medical cannabis. We know about research. We do have within Canada today over 5 million square feet of grow. We do have in Europe, 2 major facilities. And with that, depending what happens in the U.S., we will be ready to launch what needs to be launched in the U.S., whether it's taking from our existing businesses, acquiring, putting something together, we'll have the opportunity to do that. As I've said, our aspirations is to grow our beer business to a $300 million beer business. We already are the 5th largest craft brewer today within, the U.S. We have a great business within Breckenridge Distillery. We've been named some of the number 1, whiskeys within the world, within the U.S., and some exciting things happening. I'm also real excited about what's happening, in our wellness business in regards to Manitoba Harvest and what's happening with hemp from a high-protein food and now the perception of hemp as a great product and a healthy product. So, as Tilray Brands comes together over the last 5 years, there's a lot of real good pieces that ultimately will come together. There's tremendous opportunities with our products. There's tremendous opportunities with our distribution. There's tremendous opportunities as we build out, our global market. So, as I look at Tilray, we've circled a lot of the right wagons. And again, that dealing with regulatory, dealing with unknowns in regards to rescheduling, but Tilray is there. I'm real happy with the team that I have in place and excited to work with the team. We've done a great job in an industry in regards to banking, what we've done with our balance sheet, and we continue to work on that balance sheet. I'm someone personally that does not like debt. So how do we focus on our balance sheet? I'm very much in favor, and as I push with Carl and the rest of the team, cash flow and taking costs out of our business. And there's not too many other industries out there that are taxed the way we are on cannabis, on beer, and on spirits. And I wish Tilray was earning the amount of money that we're providing the governments of Canada, U.S., and Europe from our taxes that we generate from our business. With that, look forward to talking to you again soon. Appreciate getting on the call, and have a great week. Thank you.
Thank you. This concludes today's conference call. You may disconnect your lines at this time. Thank you for your participation.
All right, we're back. All right. So we still have over 115 viewers. Wow. 117 viewers. 1 hour, 23 minutes. So as always, super long conference call. Got on the conference call really early here this morning on the East Coast, on the West Coast. Still pretty tired. But yeah, the conference call started at 6:30 a.m. here on the West Coast where I am. So definitely early, but I see some people said I got up early for this. Yeah, I mean, it was less than awesome, that's for sure. I'm not going to downplay that, but again, I've been saying in my earning preps, also to Power Group private members, that I wasn't really expecting much from this earnings result because nothing really matters until we get that excise tax. They said 34% of their MJ revenue, right, went to excise tax. So if you go down to excise, 21,804,000 went to excise taxes. That's literally 34% of their revenue. So they have here 63,000,432 for their MJ biz, right? So, I mean, even Organigram and Oxley paid a third of their revenue to excise taxes. So that obviously has to change. And until it does, with regards, that's just their MJ business, obviously. But, until it does, there really isn't anything to be said, right? Like we need that to change before any, real profitability is going to be hit. Like as of right now, the Canadian government's the only one making money. So, and there's a few operators here in Canada, but like Cannara Biotech, but they're just very, very, very small, right? And they don't have a whole lot of operations. They're not even all over Canada yet, right? They still got to expand to the rest of Canada, and the stores that they do have, and that the markets that they are in now, they're struggling to meet demand, right? So they don't have the scale and the capacity, but they're ramping up capacity, right? But Tilray and a lot of these other producers had over capacity, right? So now they're right sizing the business, and that takes some time. And with this excise taxes, it sucks. I wish I could say that Tilray should be profitable or will be profitable in a month or two, or a quarter or two, but that's probably not the case, and we could see dilution. There is a possibility that we could see dilution. I mentioned that their cash and cash equivalents. Hang on here. Cash and cash equivalents. So yeah, 146.253 million. And if we scroll down, so cash and cash equivalents, 146.253 million for this quarter, and last quarter was 164.997 million this time last year. So they are seeing a little bit of cash burn there, and we could potentially see one more dilutionary event. So, don't be surprised if that does happen, because it's probably going to be at least 2025 before they achieve any kind of profitability metrics, right? If we get, obviously Germany coming online, that's not going to happen overnight. But if we get what was I going to say? Percentage excise tax switch here in Canada on April 16th. That's the federal budget. So save that date. We could potentially see it as soon as then. And then if we get rescheduling to Schedule 3 in the U.S., obviously that's going to be great for share price, because that'll create a lot of hype, but nothing really fundamental for Tilray, because it doesn't sell any THC beverages in the U.S., which is what 280E is taxed on, right? So rescheduling to Schedule 3 doesn't directly impact Tilray and their existing businesses, but it would allow them to sell medical in the U.S., which I'm not exactly sure how much that sales channel would be, but I would expect at least, double-digit millions, like at least 30 million or something like that, probably to start, and then maybe more than that. But as of right now, Germany coming online is going to take a while. It's still Pillar 1, right? Still medical, not-for-profit, and possession and cultivation. Eventually, Pillar 2 will come online, and that'll be adult use sales, right? So there's so much to look forward to, and then the rest of the EU following suit, right? Other countries in the EU rescheduling to Schedule 3 would permit them to be able to do medical. What did they say? 13,000 pharmacies across CC Pharma distribution channels. So, there's a lot to like here, right? And I'm just going to go through some of the highlights from the comments that I posted. But yeah, we had about 150 viewers at one point. So I really do love each and every one of you who supported me in the channel, and still continue to support me. There's still 120 viewers here at the moment, and that's probably more than the actual Tilray call, I would imagine. But yeah, we'll just go through. Some people said, why can't Tilray sell in the U.S.? It's because they're listed on the NASDAQ. They can't do so until federally permissible. You can't be on a U.S. major exchange and sell THC, or touch the plant THC-wise. They have their hemp business, though, right, with the Farm Bill. But yeah, and then it's going to be interesting to see how the canopy vote goes on Friday for exchangeable shares. We'll see if this provides a blueprint for other Canadian companies. And we'll look at the chart here in just a moment, but it is trying to bounce here off of the low of the day and the weekly 50 MA and 50-day MA. Margins weren't too bad. But yeah, a third of their MJ revenue went to excise tax, so 34%. And they're saying that the federal excise tax could switch to a 10%. So that would add about $80 million mostly to the bottom line, they said. Let's go through here. That's pretty much it, I think. Yeah, net loss 104.983 million. So even with excise tax improvements, they're not going to be profitable overnight. But with that happening, rescheduling to Schedule 3 in the U.S., adding that to the medical sales channel, and then Germany continuing to ramp up, that net loss, that $104.98 million net loss, would soon be erased, right? It's probably not going to be, we're probably not going to see Tilray be profitable the second that we get an excise tax shift, but that's definitely going to put us, like 70% of the way there. All right, I think that's pretty much it. But yeah, I think it said 13,000 pharmacies across CC Pharma. And yeah, make sure to tag Tilray if you're on their socials, or if there's any time you ever see them on like a mainstream media, CNBC or Bloomberg or other media outlets that are, interviewing them. Make sure to comment, especially if there's a live chat. Make sure to comment and tag them on socials, on LinkedIn and Facebook, Instagram, Twitter, X, and say, we want a PAL Group interview, because that's what happened with Hexo. They basically, a couple times they reached out to me and said, we'll let you interview the CEO, and then they got rid of the CEO like multiple times, so then I had to start over. But eventually, at one point, whenever Hexo, I heard from somebody that worked at Hexo, he said, we went into work today and everybody was talking about your video. And I'm like, so like all of Hexo, the whole organization, like 1,000 employees, are all talking about PAL Group and my video, right? And I think it had to do with the convertible note, that there was some confusion on whether or not Tilray converted it. And that was leading up into the Hexo acquisition. And so eventually, it'll be the same, where Tilray, I'm sure it's probably already that way, but I'm positive that if enough of us voice our opinions, we want a PAL Group interview. And I'm not just saying that so that you pump my channel or, shield my channel. I legitimately want to interview them, and they only want to go on these T-ball type, interviews, and they just want to be asked softball questions, right? Or they have some sort of ties with them or whatever through the traditional media and markets, but you can count on me to ask them the tough questions, because that's part of the whole, idea is, if you're coming on for a PAL Group interview, you're getting asked the tough questions. I'm not going to send you, these softball questions. I'm not going to waste my time, right? I don't care. Like all these other interviews are like, congrats on the great quarter, achieved net revenue of 188 million, 30% net revenue growth. It's like, what contributed to this? It's like, well, if you just read it, you would know what contributed to it. No one cares. We want to know, like, where's it at with MedMen? Are you going to do what Canopy's doing and create a holdings company and go to the U.S.? Like, all these tough questions. All right. So yeah, we'll do some technical analysis here in a moment. And their margins weren't bad. 38% in Beverage and 33% on MJ. Like, 40 to 50% is generally where you want to be. 40 is like the average, but, anything over like 50% margin is just phenomenal. But yeah, somewhere around that 30 to 40 area isn't bad. So, they got a lot of improvement to do there. Their guidance was terrible. Yeah, I agree. Not great at all. Their adjusted EBITDA and cash flow. But it is what it is. Like I said, it's going to be at least a few quarters factoring in excise tax improvements. If we get rescheduling to Schedule 3 and medical channels open up in the U.S., we continue to see more and more adoption in Germany, and then other countries in the EU potentially following suit. So, I would say 2025 at least. Best case scenario, first half 2025. Worst case, at second half of 2025 potentially for profitability in Tilray. And yeah, I noticed pretty much everybody in the stream. Thank you so much for all the respectful and thoughtful comments and all the support. I really do love each and every one of you supporting me. And shame on you who are insulting and disrespectful, because there's no need to be a terrible human being. I'm not trying to be malicious or spread any malintent, right? I'm here to help. I'm waking up at 6 a.m. To help you guys and gals. And for some people to come on here and tell people not to listen to me, it's like, go fly a kite, man. And I see all comments on the channel, so, and I approve every single one except the live stream. And it doesn't matter if it's a live stream or not. I'll ban you from the channel. That'll be the last comment you ever comment on. So, is it worth it? And yeah, I approve all comments on the channel, on my YouTube channel. So I see people all the time that are commenting. It doesn't even make the channel. It's like, oh, you got nothing else to do better with your life? It's like your comment didn't even get visible to the world because I have to approve it. So go suck it, you know. I can't understand why people are such assholes. It's like, I'm not telling you to buy, sell, or hold anything. It's like you're doing it and you're just looking for someone to blame. So stupid. All right. Yeah, Oxley was up 20% there today. Back down again, though. It's at the high of the day, high of the week, high of the day. Actually looks like a daily bull flag. But yeah, the only one that was really seeing green today on the bear list, we have PWR, Tilray, and IMCC. Let's take a look at USMJ real quick. IN 50%, but still only at 3 cents. Pretty much a dead stock in my opinion. NEVI and PLTH. How's MSOS doing? Down like 1% or 2% last time I checked, yeah. 1.68% down. Daily inside bar. It's also a weekly inside bar. So just tightening up inside of yesterday's range and last week's range. And it's a monthly, inside last monthly inside bar as well. So we're tightening up on all time frames. We did bounce this month and break the high last month, but we're back within last month's range. So we're ranging. And we'll do a little bit of a deeper dive here, and I'll do another video on Tilray a little bit as well. I might even just do it right after this one, because I know a lot of people don't have 2 hours to go through some of these videos, but we'll take a look at the technicals here in just a moment. I just want to go through here, see all my other comments. If there's anything that I forgot to mention. Yeah, a lot of people still saying that Irwin Simon gets paid way too much. I think his track record justifies it. And obviously, you know, we still got a lot of work to do in MJ. So, you know, if he's still there in 5 years and Tilray's, you know, profitable in a year or two or some point in 2025, and, you know, we get rescheduling the Schedule 3 in the U.S. and Germany comes online, Pillar 2, the rest of the EU starts to follow suit, and then, you know, full-blown descheduling and legalization at the federal level in the U.S., like Tilray could easily be worth $100 stock, right? And if that were to happen, I'm pretty sure everybody would would be more than happy with his salary at that point, right? But they did miss in terms of revenue. The average on Wall Street was 199 million expected. We came in at 188, so pretty big miss. And then EPS was forecasting a loss and negative 0.05. That was the consensus on Wall Street as well in my earnings prep, and came in at negative 0.12. So pretty big miss there as well. So that's why the stock was down. Yeah, low of the day at 206, so we're just hovering over that low of the day, sitting at about 20% down. I did enter a swing position as well during the live stream. So I entered, I recently made a trade on SNDL. I was buying SNDL around 140 right here. So once we popped out of here, I was scaling down, adding at this support level here around 140. And then we went down and dipped to 130. I added one more there. And then we had this monster explosion daily bull flag as well. It was targeting 268. We had 267 to perfection. And yeah, off the low there at 130 to the high there, it was up over 100%, so about 105%. So what I did was I locked in that trade on Moomoo, and I was up about 90%. And Moomoo's just, you know, I just put some money on there to play around with the platform. It was a sponsor of the channel, and I got some cash rewards as well just from signing up. There should be a link in the description for this video as well if you're interested. But essentially, I got some free cash just for signing up and depositing some money, and then made about 90% on that SNDL trade. And I've been waiting to see where I was going to deploy that capital for another trade, and I decided to do it in Tilray today. So I added around 222, and I just added another one around 210. I may add one more in my Moomoo trade account there, maybe somewhere around the 190. But yeah, on Tilray, we had a daily bull flag as well. So we had our low, high, moved that out to the 0.32 fib, and it said we were targeting about 285. We actually exceeded that. We hit 297. Not surprising when a lot of other names were running, hundreds of percent, like, ACB and CGC, some of the leaders, right, in terms of gainers. So it wasn't surprising to see us exceed that daily bull flag a little bit, but SNDL hit it to perfection, right? But yeah, one thing I wanted to mention is that this is why it pays to know technicals as well, right? If you're looking at the chart, and the thing going into this earnings, and this is what I said to Pal Group private members yesterday was, if you're running into earnings and you have a big miss like this, and you just ran into earnings on the weekly time frame without confirming a weekly uptrend, and from the low to the high, you're up 85% with no weekly uptrend, then if we miss earnings, then it's going to be a bad reaction. You're probably down 10, 20%. That was what I said. And here we are, down 20%. And it was a big miss. We also had a pretty big reversal candle here to the bears last week with a huge upper wick. So a pretty bearish candle there last week. And like I said, no weekly uptrend. So we knew that we were probably going to have to pull back for a weekly high or low to give us that weekly uptrend. We were only in a daily uptrend. We still need to confirm a monthly uptrend as well. So we have yet to do that. So we were only in a daily uptrend while a lot of other names were in daily, weekly, and monthly uptrends like MSOS, right? And a lot of the US operators, even some names in Canada are in monthly uptrends now like SNDL, but it's not in a weekly uptrend yet. So again, another clue, SNDL might come down and test 175 and back test for a higher low, right? And the same thing goes across most MJ, right? If you're only looking at one name, then you're not getting the full picture. But also, Tilray on the weekly time frame, if we would have seen a great reaction to earnings, like if we would have seen a beat in terms of revenue and estimates, even after running 85%, we still weren't in a weekly uptrend. So you have to ask yourself, okay, well, if they do beat big on these earnings, how much more upside are we really going to see when we just ran 85% and we still haven't confirmed a weekly uptrend yet, and we're still not in a monthly uptrend yet, right? So that's why if I could only teach you two things, it would be to learn what an uptrend and a downtrend is, and then factor in RSI into your charts. And I wouldn't be too concerned about the daily or the weekly RSI. It'd be mostly just, the daily or anything lower than that. I'd be mostly concerned about the weekly and the monthly, right? But you can still see EMA 12, this freaking EMA 12, man, it's still continuing to reject the price, and we haven't been able to get above it. Last time we closed above EMA 12 on the monthly time frame was back in June of 2021. Ever since then, it's just been a slow bleed. So if we can see a monthly candle close over that, actually we did it last month, just barely, but then knocked right back down. But this could be, like I said, that final shakeout before the massive breakout, in my opinion. And we're just looking for this monthly uptrend to confirm low, high, higher low, and we're looking for the higher high. We started the bounce this month. We came within about 10% away. We were exactly, it was about 14% away. So, yeah, it was roughly 10% away. And we ended up pulling back for this weekly higher low. So, it is what it is. Now let's try to get our weekly higher low set. Change the weekly uptrend, then we zoom out to the monthly, look at 340 resistance is the most important. But we did have the 50-day moving average there at 207, and the low of the day is 206. So a perfect back test of the 50-day moving average here, 50 weekly moving average. And then in the daily time frame, we back tested the 200-day moving average. And we're gearing up for a potential golden cross with the 50. The 50 days crossing the 100 right now, and it's very close to seeing a golden cross. So the last time we had a golden cross, price went all the way down at 150 and shot up to 340 on that HHS recommendation. What do you think is going to give us that similar upside? Probably the approval of that recommendation from the DEA. And I still think this month is very possible. Imagine if it was this week. Imagine if it was this week or next week and we get improvements to excise taxes as well to a percentage, 10% or something like that. Oh man, that'd be insane, which was a week from today, April 16th. But yeah, we're gearing up for a golden cross. So this is why I was adding today in that swing account. Off the high there on the weekly time frame, we're now down 30%. We're just looking for a weekly higher low. I mean, realistically, once we started weekly consolidation, losing the low of last week, that allowed us almost 32% of downside and room to form a weekly higher low, and for bulls to attempt a trend change. So it's looking pretty decent. And the odds of that happening are quite high in my opinion. I just want to see how much we've pulled back. See how we have we're right in the golden pocket as well with the 0.618 and the 0.786. So in my opinion, we may go down to 190, but I don't think there'd be much downside beyond that here in the short term, especially with all the catalysts looming. How's SPY doing today as well? How do we have from the broader market? What kind of weakness do we have there? Yeah, we are at the low of the day. We did break the high of yesterday slightly, but now at the low of the day, we did lose the daily uptrend. We could see an EMA 12 and 26 bear cross, which would be the first time since September. And very possible that we're heading to daily oversold, which would be the first time since October. So this would be headwinds for Tilray and the MJ sector. So if we continue to see this weakness, we could be heading to daily oversold on Tilray. That would probably put us somewhere around that 190 area in my opinion. Maybe 180. And like I said, I might add one more time at that area in my swing position. All right. It's been a while since I looked at the chat. I guess I lost my spot, and lots to cover here. Wow. He was going hard on government tax money grubbing at the end. Yeah. Well, I mean, it's kind of ridiculous, right? Look at all these companies that are going insolvent and bankrupt. It's just like, come on. Like, it has to be by design, right? Waiting for that 208 I just missed. Just have a drink of water here real quick. I'm West Coast 2 and Cal. Nice. Welcome, welcome. Move to Germany. It's 4 p.m. Yeah, that'd be awesome. Can't wait to go on a trip to Germany, though. Definitely be doing a trip to once, probably in Pillar 2 once it's full blown rec sales and everything, and then definitely be doing some videos on that trip. But can't wait to. I've only been to Germany's airport in Frankfurt, but I've never actually toured around Germany, so I'd love to. I lost an hour of sleep. But Rod, they're still losing money with excise tax. So tell us, what is Tilray doing wrong? Well, you got to remember too, right? Tilray was one of the original companies where when Canada legalized, they planned for they just had too much capacity, right? They had overcapacity, so then they have to right size things. There's a lot of price compression and things like that in Canada. The slower rollout in Canada, the combat of the illicit market wasn't as quickly, but a lot of it has to do with the federal government, right? Like, we still can't buy edibles here in Canada that are more than 10 milligrams. So, in the U.S., you can go to Colorado and buy a 100 milligram beverage or 100 milligram edible, like no questions asked, right? I think you can even buy multiple if you want. Like, they don't care. Like, there's a 30 gram max on your purchase, and then the beverages were only can only buy 5 of them at the beginning, right? So it's just. I blame mostly the federal government here in Canada, but obviously Tilray overcapacity, that was on them, and there's some things that have been on them as well. And they're planning for the U.S. beverage market. They've got their hemp business, they've got their distribution business with Tilray Medical and CC Pharma, and they're planning for Germany, so they were expanding to Germany, getting their operations over there in EU GMP certification and whatnot. So a lot of this takes time, right? And look at Cureleaf. Cureleaf is a very similar business. They're focusing on international. They just acquired Northern Green Canada, an operator here in Canada, and they're not yet profitable either. And they're still seeing some losses as well. And that's because they're looking at the world scale. They're not just trying to be good in one or two markets in their own home country, right? They're planning for world domination. So that's what I think is going on, is this, they're okay taking a hit now because they want to be the best, right? They're going to be probably, I think, top 3 for sure, if not the top MJ company globally. And Cureleaf's probably going to be up there as well. Thanks for going live. Over 100 live viewers. You only got an army, man. Congrats for you. Thank you. I appreciate it, Brian. Yeah, there was 150 there at one point and still 113. So going on almost 2 hours. So I really do appreciate it, and like I said, it goes both ways. I'm just doing my best to help each and every one of you. I'm a retail investor, just like each and every one of you. So, but what's the point of having 146 million in cash? Well, they've been talking about doing more M&A, so mergers and acquisitions and accretive type of investments. So we'll see if they do any kind of investments into other brands or other companies as a possibility with that cash. But yeah, it's entirely possible that we see one more round of dilution. So don't be too surprised if that happens. If it does, it won't be the end of the world. Tilray is operationally a mess compared to other LPs, SNDL, ACB, CGC. Well, I wouldn't say that. ACB and the CGC probably have like the biggest hate community out there, and SNDL is only seeing most of that because of their acquisition of Alcana. That like exploded their revenue, and that mainly comes from retail liquor sales. But yeah, SNDL is definitely, I hold it in my portfolio. I hold a little bit of ACB and like a tiny bit of ACB, and then I hold CGC as well. But yeah, I mean, they're all very different businesses. Greetings from Germany. Greetings, Pat. I assume that means greetings, gentlemen club. I am crying badly. Bought at 389 CAD, holding the last 2 years. Did not escape in many chances, even last week again. Oh, it's all good, Shanto. I mean, that's actually not a bad average compared to some of the people. I know some people that bought it like $60, and yeah, needless to say, they're not doing too good. Rod, are you losing hope in Tilray now? No, not at all, Paisley. I'm still holding my core long-term position. I actually bought a swing trade on Tilray. So I added today at 220, around 220, and then again at 210. And I might look to add on a flush of $2 here, which we're testing the low of the day at the moment. But that'd just be a swing trade. And more than likely going to hold it until they confirm a monthly uptrend. But like I said, it's looking pretty decent here. We're back testing the 50 weekly moving average, and we're back testing the 200-day moving average, and we're gearing up for a golden cross. So I wouldn't be surprised if we get some sector-wide news and catalysts at some point soon. NYSE listing has been bad for Tilray since the beginning. Yeah, I mean, I wouldn't say that. I mean, in one day, there was $2.2 billion traded in March 2023. And if that's happening near the lows, who's doing all those buys, right? Like who's buying all those shares? It's definitely not retail, right? It's the institutions. So what do they know, right? They know buy low, sell high, and they know what's coming. Just put it back to OTC. Think they're going to dilute us shareholders? Yeah, it could happen again, Cody. I wouldn't rule out one more dilutionary event, maybe two. I would say like one for sure at this point. But it wouldn't be the end of the world if they did. More than likely going to be for some type of merger or an acquisition or investment. ACB, Organogram, and Canopy looking much better MJ companies at the moment. I would, yeah. I'm not sure how much you hang out on social media, but ACB and Canopy are still hated a lot. But yeah, Organogram, I love Organogram. A third of their revenue still going to excise tax as well, and they're like 100% MJ play, right? So that's really big for them because 100% of their revenue is focused on MJ. So beer business strategy was a mistake. I disagree. I think it'll be good long term, and I think craft beers, if it was just regular beer, then I'd be like, yeah, but they're focusing mostly on craft beer and spirits, which will be easily infused with MJ eventually. And that 420 Pale Ale brand specifically will be huge, and it's a fantastic beer. I had it when I was in Florida. Callum McIntosh, only with price action, fundamentals are worse than Tilray. Yeah, I would agree. Alex, 100% agree, only benefited from its distribution. Organogram actually has bigger backer in American Tobacco. Yeah, they have a British American Tobacco, $124 million investment from them. Oxley has $123 million worth of convertible debt that they converted into shares. Canopy has Constellation Brands, Altria, Kronos. Tilray's just Tilray, right? Like they're just a giant in themselves. their guidance looks much better. Yeah, I'm not too sure on that, but yeah, Tilray's guidance this quarter definitely wasn't great. ACB is no longer worse. Tilray is now the worst run top LP. It always seems like the one at the top always gets the most hate because usually the one at the top has the most retail investors, and usually the ones that get hit the hardest run the most. And Canopy at least being proactive instead of being reactive. Agree with you, Alex. We are in the worst run LP. Our priorities are in the wrong place with future catalysts. They said the same thing about CGC and ACB when they were leading too. I think stock market channels and boards will have a few shitheads in general. Yeah, I agree, Harry. I still see Tilray as a long-term hold. Me too. Thank you for the stream. You're welcome, Alex. But I'm not adding more right now, Pennywise says. Yeah. I'm not adding long-term at this point, but I did add for a swing. We're hitting a new low of the day here, sitting at 204. I may look to add one more time around $1.90 USD for a swing. Thank you for the stream. You're welcome. Callum. Oh, I think I lost my friggin' spot again. There we go. So is Tilray going to continue to be your strongest position in MJ? Yeah, it's still my number one holding. My number two holding is Cureleaf. At the end of the year, maybe, do they still need to make a CEO change just so depressing every dang quarter? I don't think they do at this point. It's pretty much par for the course. Excise tax shifting, Schedule 3 in the U.S., medical channel opening up, Germany coming online, still not Pillar 2 yet. I think we're still very early. MJ is still not mainstream. It'll take years yet. Agreed, Boris. Tilray need a new CEO, man. It is disappointing. I don't need $100. Happy with $30. Today marks my 6 months without alcohol, but I'm with this Tilray price action. I'd need one. Nice. Congrats on the 6 months. And that's another thing too, right? Like people are looking for healthier alternatives. So, I think once federally legal in the U.S., I think Tilray will pivot to focus mostly, I would say like 70 to 80% on MJ. But as of right now, they're just, their beverage brands and their alcohol business is giving better margin and not, it's kind of a stopgap and then can later on be infused with MJ brands once federally permissible, right? So $100 stock, I won't own any by the time it hits 50. I'll be retired. Yeah, I probably would be mostly all out by $50 as well. I'm going to wrap it up. I'd rather keep Irwin. We have a slight improvement, but it will take time than switching to a brand new CEO. He doesn't know what he's doing. Yeah, and you have to learn the business, and there's a lot to know, right? Plus, Irwin has a pretty good track record from previous companies. Didn't the same thing happen with CGC with their beverage brand? I'm not sure on that one, Sophie. Not sure what you're referring to. I don't even see any of their MJ beverages anymore. They were terrible. Tilray's Trust beverages are amazing though. The #1 market share. How much are sorts causing this stock pain? At what price do all of them get crushed? I wouldn't say most at what price. It's going to be at what catalyst, and I think that's going to be rescheduling. It's not over for Tilray. They are still a long hold. It's 420 in Germany right now. Nice. Why is High Tide so low compared to CGC, ACB? High Tide's actually down less from an all-time high perspective compared to CGC and ACB. So if you're looking at a weekly time frame or a daily time frame, then those shorter term time frames are deceiving. But High Tide held up way better during the bear market. So CGC down 99% from all-time highs. It's even after a 200, 300% move to the upside, it's still down 97%. So puts it into perspective for you. What is a real expectation future share price for Tilray? I, for one, cannot see $100. I just wonder how or why people believe this. $100 would be would be obviously irrational exuberance, right? It's not justifiable. It's because of hype, right? It's because of, it's like when, Tesla was trading at at the peak there in 2021. Obviously, it wasn't justified at that valuation, and then price came down like 80%, right? And now we're probably trading somewhere around, closer to fair market value. But the market goes higher than normal. It's irrational exuberance, and then you get the same thing to the downside, where you trade, absurd prices to the the upside, and then absurd prices to the downside. And obviously, right now it's absurdly low. But $100 definitely not out of the question, in my opinion. They could easily be worth $100 billion one day, maybe even a couple $100 billion. Right? We've got all these, their distribution business, their hemp business, their alcohol business, their MJ business. It's not going to happen overnight. It's going to probably take 5, 10 plus years, but $100 definitely doable. But I think more realistic would be $25 to $50, given the right catalyst. What needs to hit for this to hit $100? Always said $40 with full legalization and excise. Yeah, I think anywhere from that $20 to $40 area is a lot better. And I mean, price was just at $1, right? So I mean, $100 would be great, 100x. Yeah, I'd be happy with $20 to $40. That's for sure. $40 is much more reasonable in my opinion. Yep, I agree. But as we know, the market can stay irrational longer than we can stay solvent, and sometimes it just doesn't make any sense, right? It's like during the dot-com boom, all the tech companies exploded in value, and that wasn't justified, and then they dropped like 95%. But then ultimately, over decades, they went way higher than their dot-com days, right? So this is just a disaster. MP not having it today. Go off. Yeah, it's bad. Tilray is improving little by little, though. Everyone knew the earnings would be crap. Why are we so stupid? I mean, yeah, I wasn't expecting much from it, to be honest. And like I said, until we get excise tax improvement, a third of their MJ revenue going to that, I mean, it's almost like a point looking at it. Go VFF delisting is off. Yeah, that's awesome. Good to see that. Sold and bought at 208. So I mitigated the loss, but man, the stress. Yeah, then that's why, a lot of people don't end up trading very often, right? Because, when you're day trading and things like that, it's very stressful. So that's why I recommend having a long-term account and a shorter-term account, right? Which is a better buy, Tilray or MSOS? I mean, at current prices, I'd probably go Tilray. But I own both of them. I think they're great buys long-term, but in terms of a sheer, percentage gain, MSOS, even if it goes back to all-time highs, you're not looking at life-changing wealth or anything like that. You're looking, if it goes to $100 on MSOS, you're looking at like a 10x, right? If you invest $1,000, you'll have a $10,000. If you invest $1,000 into Tilray and it goes to $50, right? That could be life-changing wealth. I have positions in both Tilray and MSOS. Yeah, I feel like most people probably do. That was exactly my plan, Doodle. Now I'm so mad I didn't. I'd love to buy more shares here, but I'm not sure. Maybe I should buy something else. Yeah, and I mean, hindsight is always 20/20. There's lots of great companies out there. I really like SNDL, High Tide, Tilray, Cureleaf, MSOS. Can't go wrong with that. It's minus 21%. How can you be so optimistic? Oh, well, it's actually up from 150 to 205. So if you change your mindset, it was just at 160 back on March 14th. So technically, we're still up 27%. So it's just how you're feeling in the moment, right? You can't get emotional. You got to look at it and say, okay, well, we knew that we were in a weekly uptrend. We ran all this way without confirming a weekly uptrend, and we had tons of room for a weekly higher low. Most likely scenario is that we probably formed a weekly higher low. And again, change your mindset. From back here at the low at 150, we're up 35%, right? So it's all relative. Maybe you should have went short, and then it wouldn't be a failure. But you can't beat yourself up. Hindsight's always 20/20, and have a plan. It's not that I'm not optimistic. It's just that I'm realistic. Personally, I couldn't find anything better to buy. In 2024, it seems that the highest pile of crap you invest in, the more you get paid. Hints, meme coins and ACB, CDC. Yeah, exactly, right? It's the speculative phase, and, eventually we'll hit the blue chip phase, and, the boys and girls will be separated from the men. Like, the men and women will be separated from the boys and the girls. But I would like to know what positive things Tilray has, because I only hear negative from both articles and retail. Well, that's by design, right? Same thing happened with Tesla. Before Tesla in 2018, I was saying buy Tesla. It's going to be an absolute juggernaut. And mainstream media and retail were like, oh, they make less cars in a year than Toyota makes in a month. They're not profitable. Blah blah blah. Same thing you hear with Tilray. They're not profitable. They're losing money. They're never going to turn a profit. And then all of a sudden, they're worth more than every other retail or automaker combined, right? Now retail loves them, and the articles love them. So when mainstream media and articles and all of retail hates a company, that actually makes me bullish. Because what do we know about retail and mainstream media? It's usually the contrarian view, right? Retail's mostly always wrong, and the mainstream media, you probably just better off doing the inverse, right? That's why they have the inverse Kramer ETF, because he's mainstream media, and basically everything he says, if you do the opposite, you'll do way better. I think beverage market is always a solid revenue stream, and 5% market share is a pretty substantial amount. Yeah, and it's only going to get bigger, Cody. I will distract myself watching hockey tonight. Yeah. No Oilers tonight, though, unfortunately, so I'll be tomorrow against Vegas. Can Tilray hit $7 this year? I think so, yeah. That'd put us at the 200 weekly moving average at 704 USD. GTBIF came within like a buck. High Tide came within like a buck as well. So if Tilray were to do the same, that'd be around 704. And I don't think Tilray's going to get left out. The sector moves together, but not down to the, even the week, the day, the minute, the second. But if you zoom out on the monthly, when in doubt, zoom out. If you zoom out on the monthly, look at the yearly and the monthly time frame, right? Look at the monthly time frame. What does that look like? Okay, so GTBIF and High Tide, what does that look like? It looks pretty similar on the monthly time frame, right? What about GTBIF? Looks pretty similar, right? Still same trajectory. Okay, what about the 1 year chart? Tilray. GTBIF. So down 82, Tilray 99. So some just holding up better than others. OGI looks the same, right? SNDL, same. But in a couple years from now, we should see High Tide be up somewhere around that $8 to $10 mark, in my opinion. We should see SNDL up somewhere around there. Probably not that high, but maybe $20-$30 I could see. And then same with Tilray, probably up somewhere around, I don't know, like 1,000. Just kidding. But no, I mean, ultimately it's going to look the same, right? Over the next few years, everything will start trending back high, higher. Some people, or some companies rather, get hit less hard, and some harder than others, right? And you got to remember too, all of the shorts are in the U.S. names, because that's where the major volume is, right? That's where the institutions are, and then also the manipulation, right? The U.S. names don't really have all of the volume, right? Like Tilray and CGC, ACB have hundreds of millions of dollars. Tilray in one day in March 2023 had $2.2 billion traded just on the NASDAQ. So most of that's institutions, right? Manipulating it, shorting it, rinse, repeat, providing all that chop. So, but yeah, MSOS, very similar chart, right? Over the last few years, down 90%. So 90% or 99%, pick your poison. But ultimately, over the next couple of years, I think everything's going to start trending back higher, and I could easily see Tilray back at that $40, $50 range. And one thing I don't understand is we were just at $67 on Tilray in February 2021. So I don't understand when people say, I don't understand how it can go to $50 to $100. It was just at 67 like a couple of years ago. how could it not go back there? Like, if it was there once, it can definitely go there again. Like, it doesn't make any sense. I don't understand why people have that mindset. It's because once something goes in a trend for so long, if it's going down for so long, they think it's impossible. Everybody thought it was impossible here, too, when it went to 67. That was just on the hopes of the Dems legalizing and taking control of the Senate. What happens when it actually gets legalized, and then 5-10 years after that, when we hit the blue chip phase? Like, this stock market's not hard. It's emotions that are hard. When is the excise tax announcement? If it hits safer rescheduling and interest rate drop, it could explode very fast. It'll be a week from today is April 16th, the federal budget, so we could see something then. Capped. Hello there. Happy to have discovered your channel. Thank you, Julian. I appreciate it. Welcome. Happy to have you. Appreciate the support. I'm only losing because of a Hexo that killed me, moved my average from 570. I have like 10K shares. Yeah, I just converted everything over as well. So I'm still holding from the Hexo acquisition. I had a small Tilray position at that point as well, but yeah, I'm very heavy on Tilray. Do you Tilray give chance this month $4 Canadian again so I can escape? Yeah, it's very possible that we can get back up there this month. Rod, you're sounding like Simon. You're very positive. I wish I could feel the same. Thanks, Craig. Well, I've been here before, right? Like I've been investing in crypto and MJ for multiple years since 2017, and the two most volatile sectors on the planet. So nothing surprises me anymore. And yeah, I was there when Tesla was same thing, right? Retail and articles were like, don't buy Tesla. It's never going to be profitable. It's losing more money than they're never going to sustain itself. It got sued by the SEC. There was so much FUD from that. They make less cars in a year than Toyota makes in a month. I can't believe you're investing in Tesla. And then it went on to shock the world, right? It's the same type of narrative. Obviously not the same category, but you got to remember too, they're selling cars that are not Schedule 1 drug. So people are always like, oh, how are you comparing Amazon or Tesla to MJ? It's like, it's actually worse than what you think, because they're selling a Schedule 1 drug on the same list as heroin. Amazon's not selling heroin or MJ, right? Same with Tesla. So if they were struggling to turn a profit not selling a Schedule 1 drug, what makes you think these companies are, Tilray or these other companies are just going to do it, super easily, right? There's still some countries that offer the death penalty just for simple possession. 248 average on Tilray. Should I be worried after the ER? Minus 22% seemed to be an overreaction to me. Yeah, like I said, it's just a weekly higher low that's forming. We knew that we were more than likely going to need to pull back here on the weekly time frame, form a higher low. And like I said, in terms of the 0.786, it's there at 190. So I might look to add one more time here for a swing around that level. I've been scaling in, bought at 220, 210. I was trying to hold off to a little bit under $2 for a third entry, so we'll see here. SPY's still not looking too hot either, and could be heading to daily oversold, the S&P 500, so that would probably put us down in that 190, 180 if we get to daily oversold. $1,000 sounds fair. Yeah, I was just joking. If it did get to 1,000, if Tilray ever did get to 1,000, it would probably pull back to 100 after. But that would be at least 10 years out. Nova is flat at 179. Nice. Yeah, a lot of names pretty much flat on the day today, but down. Actually, yeah, everybody, most are down double digits now. But look at ACB. It hasn't even started weekly consolidation yet. And could still see an EMA 12 and 26 bull cross, right? So this is what happens when you run, how much percent? 213%, and we still didn't change the weekly trend. You need to expect a pullback. And it's a weekly inside bar and a huge range. So probably not going to happen this week, but we could see weekly consolidation next week. ACB and CGC clearly outperformed the last few weeks. Yeah, but they were beaten down the most, right? Look at them from September. From September to the low, they were down 75%. CGC from September to the low was down 85%. Tilray from September to the low. Oh. So you're telling me that Tilray was only down 52% from September high to the recent low. Why would that matter? Well, if something down 85% in the same time period, what would 52% be? Exactly where we are. Do you see how this works? It's all relative. Basically, we're just back to where Tilray is now. Not even. Tilray's still only, even right now where we are, Tilray's down only 41%. But at the max, it was down 52%. So technically, CGC is still down more from the high of September than Tilray is. Right? It's funny hearing people complain their average is $4 or $5. Try 14 and see how you feel. Yeah, agreed. Craig, I know some people that bought in the 40s and 50s and $60 range. So context was different. I don't know. 201, time to load up. Guess we'll wait till 420. Is the excise tax a done deal next week? What's your thoughts? I'm pretty sure it's a done deal, yeah. They keep talking about it. And it's not a coincidence we're seeing rescheduling and removal at 280 right around the same time either. If it does lower, does it jump high? Yeah, I think so. Is the excise tax a done deal next week? Yeah, I already answered that. What do you think for SNDL? Yeah, I mentioned on one of the recent videos that I expected some downside somewhere around that 170, 180 area for a weekly high or low, similar to what Tilray's doing. Looks very similar, right? Low, high, no weekly uptrend. Same with SNDL, no weekly uptrend. So we need our low, high. So yeah, we could be suffering the same fate as Tilray here. Very similar. It's just Tilray's already consolidating on the weekly time frame, and SNDL has yet to lose its low of last week. But we would have to lose 191 to lose the low and start weekly consolidation. And then we could pull back to around 175, 170 area, in my opinion. Does ACB and CDC trade more drastic because of less tradable shares, like a lower float, you mean? Yeah, I would have to check. I think so. But I think it's mostly just due to how beaten down they are, right? The more that a stock gets crushed, like if you're down 85% since September, you know, even after a 200, 300% move, you're still down 52% since September. So it's like, it's still crap. Still crap performance. But if you're a trader, or if you're a swing trader, if you got in the last couple of months, you're like, oh, I'm a genius. I'm up 200%, 300%. But the stock's still down 52% since September. So, you know, it's all relative. All right. You sound very optimistic about Tilray. Makes me feel better. Thank you. You bet. I'm just trying to be realistic. I'm not trying to feed you full of, you know, hope and all that stuff. It's just I'm just literally talking from the heart and talking how I feel, and I sleep very well at night, and that's why I'm diversified too. I hold Tilray in a long-term portfolio, a shorter-term account. I've got a swing trade right now, like basically just like a very short-term. Like I won't be selling any Tilray in my short or my long-term account, and like short-term account probably won't sell any until at least $10, and then my longer-term account I'm not selling until the U.S. legalizes. But in my swing trade here on Tilray, I'll probably swing it to around 3 or 350 once we confirm the monthly uptrend. But yeah, high tide already confirmed a monthly uptrend, so it's looking really, really good. Yeah, it looks solid. I agree. The excise tax does get approved. Can they file adjustments for the beginning of the year? That's a great question. I would probably say no, because the government doesn't like to give anything back. But that's a good question. I don't know if they're like if the legal sleuths could tell us or whatnot, but yeah, it would all depend, I guess, on how the wording and the verbiage would be, and like, yeah, I guess we could find out from then. But keep in mind, Canopy's shareholder vote is on Friday, And that could create a lot of hype with regards to like mainstream media pumping it, like, oh, CGC, going to be buying acreage and doing the Canopy USA. So we could consolidate. SPY is a little bit weak, heading to daily oversold potentially here. So we could see a little bit more downside, maybe on Tilray, we go to 190, 180. That would be another, 5-10% of downside. Hit daily oversold. And then into Friday, I think we could see some hype in regards to that CGC deal. And wouldn't it be amazing if we got hype from that, rescheduling to Schedule 3 announcement soon, and excise tax improvement on April 16th. So just when everything seems like it's the end of the world, it's actually not too far away from seeing massive catalysts. And depending on how many we get strung together, this could be epic. You have to see the overall picture, and I like what I see in Tilray. I agree. September 4th, 2018, Tilray peaked at $300. Yeah, that was on the IPO. That was a crazy day. I remember watching that. I'm new on TLRY, on Tilray. I don't know much about the business, the company, or stock. I have a small line of curiosity, but I start to like what I see. Yeah, so, definitely don't want to go too heavy on a stock you don't know. I've easily got 1,000 hours, if not 10,000 hours into MJ stocks and research and due diligence. So, and yeah, do something because you want to buy something because you want to buy it, right? Don't buy something because somebody else tells you they're buying it or they think you should buy it. In my opinion, I don't think anybody should ever tell you they think you should buy anything. You need to think that you want to buy it. So, yeah. I've seen people buy MJ stocks and, they try to shift the blame. They try to blame people. Or when the going gets tough, they don't have enough conviction in the stock because they don't know enough about the business or the sector or the growth trajectory and possibilities and where we are in the cycle and where we are in the adoption curve of this industry, right? And the fact of the matter is there's still countries that offer death penalty for just simple possession. So, we're so early, it's not even funny. The U.S. still treats it the same as heroin. I mean, come on. How is the management trustful? What about the stock? Did it witness a lot of reverse split or dilution? No reverse split on Tilray. I always said I don't think that'll happen. Dilution, yeah, there's been dilution. There could be another round of dilution for sure. Maybe two. I would say one for sure, maybe two. But depending on all the catalysts that we get, the days of unprofitable LPs could be numbered. And licensed producers here in Canada is what LPs means. And then, yeah, if they're turning a profit, then they don't need to dilute to raise money, right? If you're not making any money, if you're losing money, well, then what other choice do these companies have other to get, lending from financial institutions, which, they're paying a high interest rate. Some companies and banks are very reluctant to lend money right now. And then the only other option is to tap the equity markets and dilute, right? So good thing is there's light at the end of the tunnel. And with excise tax, Germany, rescheduling the U.S., there's a lot of pathways forward to get to profitability. And they talked about moving their beverage business as well from Belleville, which would save them, I think they said like one time $80 million or something like that. This isn't going to $100 anytime soon, and it was a bad call. I don't think anybody said it was going to $100 anytime soon. If they did, I would get you to question their, get them to check their brain. Thank you for the honest answer, so you bet. Yeah, well, like I said, we were just at $67 back in February of 2021 on the hopes of U.S. legalizing when the Dems took control of the Senate. So what do you think is going to happen when we actually get full-blown legalization? Not hoping, not hopes that it's going to happen. When it actually happens, and then when it actually happens, what about 5 to 10 years from there? What about 20 years? If we hit $67 on the hopes, what happens in the blue chip mega merger phase? Just ask yourself that. If CGC and ACB hit $25 and $50, do they split back? Good question. I don't know. Maybe. Wouldn't that be something? I keep selling calls against my Tilray holdings. The regular income stream helps. Yeah. It's a way to get a dividend. Yeah, so essentially you're selling options. Yeah, it's called money for nothing mentality, right? You're just collecting the premium and selling options. They expire worthless. You collect a premium, right? So awesome Glad to hear that. Well, like Boris Jordan always says, executive chairman of Cureleaf, he believes that MJ is going to be a very high cash flowing businesses eventually. And he said if not for 280E, they'd already be paying a dividend to investors because that'd be $350 million that they paid to the government that they would have on their bottom line. And they'd have more money they know what to do with. And they're probably north of $400 million now. But he said they'd already be paying a dividend. So yeah, I do think that dividends are going to be a very popular thing in the MJ space eventually. If excise tax is approved, the ability to file adjustments for the year's start date depend on whether excise tax applies retroactively in the specified rules established by the tax authorities. Yeah, agreed. Yeah, it's going to depend on the all the technicals and the little minute details. Legalization could happen in a year or 15, right? That's the thing. Time can be ally or enemy, I guess. Yeah, exactly. So as long as you have a plan for both, right? That's the name of the game. 313 by the 18th, not financial advice. Who's selling? What does that say? Who's selling today anyway? Yeah, sometimes on the live stream, if I'm looking at my streaming software, it's always like this emoji icon right in the way, and I can't see sometimes your full message, so I have to switch over to YouTube. All right, still 113 viewers after 2 hours and 25 minutes. Crazy. Thank you so much, everybody. Let's see if we're bottoming out here on Tilray. We're testing the 50 weekly and the 200-day moving average. We have the 50-day moving average there at 196. Golden Cross is very close to happening. So like I said, just whenever you think all hope is lost, the technicals are actually looking not too bad. And we could see a 50 and 100 weekly bull cross here in the not too distant future either. And look, that's happening on Green Thumb as well. So when the shorter term moving averages are below the longer term and they cross, that's bullish. When the shorter term is above the longer term moving averages and they cross, that's very bearish, right? So the 50 weekly was above the 200 on GTBIF. They crossed. Price at that time was at about $13 and it went to $6. Now we're seeing the flip side with the shorter term below the longer term and crossing. That's very bullish. So Tilray, same thing. 50 was above the 100 cross. Price went from about $8 down to $1.50. Now we're gearing up for a bull cross of those weekly moving averages, and when it's on the weekly time frame, that's even more bullish. And then the golden cross as well lining up. You have any input on companies like Weed Maps? I do follow them a little bit, but not to a great detail at the moment. No, I do think that it's good, like to diversify and whatnot, but yeah, it looks very similar, right? Definitely looks like an MJ stock. I'm not selling today. I'm holding what I have long term. Buy the dip. Not financial advice, of course. All right, going to end it there. That was fun. Definitely makes the earnings calls fun coming on and chilling with everybody. And hopefully it was informative. And I'll probably do another video. Definitely not a 2.5 hour video after this for people who just didn't have the time or won't have the time or won't make the time to invest in themselves or learning about Tilray. So, yeah, at the end of the day, I've spent 2.5 hours today. I've probably spent easily over 1,000 hours researching this company. And when you put 1,000 hours into something and you really know what you hold, you really know what the industry is, where it's going, how early we are, it's hard not to get excited. So, at the end of the day, it's brutal. Down over 22% is rough, but we're still, we were just at 150, 160 not too long ago, so keep that in mind. So, all right, going in it there. Will CDC dilute again? Yeah, very possible. As funny as it sounds, Tilray paid off the debt this quarter, and now shares will be purchased from the market on this day. In the absence of headline, what's your CDC price target for the next month? I think $15 to $20 is possible with CDC, but I think we would need some sort of headline to get us there. But yeah, Tilray, it's making progress, right? Making progress for sure. So, all right. love each and every one of you. It's Rob with the Pod Group. Thanks again for joining us in the Pursuit of Wealth. Hopefully you enjoyed the live stream today. We'll continue to do these in the future as well. As I mentioned, my daughter's just over 2 months old, so it's been pretty hectic, and I think I only got like 4 hours of sleep last night to come do this. So hopefully everybody appreciated it and enjoyed it. All right, have a great day, and we'll talk to you soon.